Pepkor says it's delivered a strong performance in a challenging operating environment. During the half year, the retailer faced import supply chain disruptions which negatively impacted in-store product availability, and it also had to contend with a constrained consumer. Nevertheless, group revenue rose 9.5% during the period thanks to a boost in fintech sales. Looking ahead, Pepkor has highlighted that import supply chain disruptions are likely to continue, and this will weigh on the businesses. It's also highlighted tomorrow's national elections as a potential risk event, and the firm says it is ready to respond to any potential disruptions as a result. One positive that the group is eyeing is the possibility of expanding in Brazil. It says the move remains compelling and would allow the business to build international scale. Reinet has grown its net asset value by 8.1% during the investment vehicle's full year. This reflects the increase in the value of the firm's investment in Pension Insurance Corporation. It also takes into account significant dividends from both Pension Insurance Corporation and British American Tobacco. Going forward, Chair Johan Rupert says the group will continue to seek new investment opportunities and partnerships that fulfill its objective of providing long-term capital growth and support its existing portfolio companies. That's as it looks to be successful against the global backdrop of the ongoing Ukraine crisis, increasing unrest in the Middle East, heightened global geopolitical tensions, continuing elevated interest rates and stubborn inflation. South 32 says the sale of its Illawarra metallurgical coal business is on track to be completed in the first half of its 2025 financial year. The deal is still subject to the satisfaction of the remaining conditions. This includes approval by the Foreign Investment Review Board. The Illawarra disposal is in line with South 32's strategy to streamline its portfolio as it looks to reshaping its asset mix towards commodities that are critical in the transition to a low-carbon future. Vukile Property Fund will not be making an offer to take control of Capital and Regional. Last week, the group submitted a non-binding indicative proposal to the board of the UK shopping centre owner, and that related to a possible cash and share offer. Vukile says it's engaged with the firm's largest shareholder, Growth Point, but it has not been able to reach agreement with Growth Point on the terms and structure of any possible offer, and therefore a bid won't be made. In news across Africa, Egypt's electric taxi service has hit the roads in the new administrative capital, providing an eco-friendly ride-hailing solution for people within the city. Let's take a look at the detail in this package report.
Egypt's electric taxi service hits the roads in the new administrative capital, providing an eco-friendly ride-hailing solution for people within the city. The new Capital Cab project was initiated by Egypt's Ministry of Transport and is owned by affiliated company Superjet, formerly known as the Arab Union for Land Transport. The initiative is operated by Caesar Clean Energy Transportation Solutions Company. CEO George Michael.
It's the first clean energy transportation project, a ride-hailing solution like Uber and Careem companies. What makes us different from any other company is that all our cars operate on clean energy. They are electric cars. And this, of course, helps in reducing pollution levels and moves us a step forward as a country seeking to use clean energy.
The new Capital Cab service aligns with Egypt's efforts to develop its transportation system. The vehicles are equipped with advanced safety features, including interior and exterior cameras and GPS, and can be booked through a smartphone app. 10 electric taxis were introduced in its initial phase, with plans to roll out a total of 145 in subsequent phases.
Further afield, Argentina's rare mix of near 300% inflation and a propped-up peso have left Nanawa, Paraguay, a border town where shoppers used to flock to buy cheap imports from Argentina, a ghost town. Here's more detail in this package report.
Shoppers are no longer flocking to buy cheap imports from this once bustling town on Paraguay's border with Argentina. For years, the weak peso kept prices low for fuel, medicine, and groceries, all smuggled across the frontier. But with a rare mix of Argentina's near 300% inflation and a propped-up peso under Libertarian President Javier Milei, Nanawa has become a ghost town. Supermarket employee Raquel Alvarenga has seen it firsthand.
100% a 50.
It's been quite damaging. Sales have dropped by 50%.
Comercio en sí.
Other shopkeepers estimate plunges between 60 and 80% since Milei took office in December, when the Argentine president sharply devalued the official peso currency and ushered in austerity. Since then, the peso has been allowed to depreciate just 2% per month. Monthly inflation, while slowing, has been some 10 to 20%. That's meant prices in dollar terms have soared. Tourists and exporters are feeling the pinch. In September, a kilo of beef cost around 2,800 pesos on average, or $3.70 at freely accessible parallel exchange rates. Much cheaper than the $7 at Uruguay's Montevideo or Chile's Santiago. Data from April shows Argentine beef prices around 6,500 pesos, nearly $7, largely erasing the cost advantage. Border towns in Paraguay, Chile, and elsewhere have seen lower local demand for Argentine imports. Some are cheering the shifting trend, which has also meant fewer locals making day trips to Argentina to look for bargains. Back in Nanawa, supermarket employee Alvarenga says she's adjusting to the lack of shoppers.
Bastante cambios, porque antes esta hora los vehículos se.
There are quite a few changes because there used to be a lot of traffic at this time, and now there is no more. Before, we had to serve people outside because we couldn't fit everyone in the store. Now, we have time to drink tea.